In this short clip, we will discuss fund accounting and fund balances in Wisconsin school districts. Wisconsin public school districts use fund accounting. Each fund contains a separate set of accounting records. Think of a fund as a self-contained present. Each fund comes complete with its own set of assets, liabilities, and fund balance, as well as its own series of revenue and expenditure accounts. A fund balance is first created or is increased when revenues exceed expense and decreased in the alternative. Further, it is the difference between assets and liabilities, and as such, fund balance usually contains things besides cash. Fund balance is not a cash account that directly corresponds to a district's bank account. Cash is an asset, but not usually the only asset. There are 5 different fund balance classifications outlined in GASB 54. From most restrictive to least restrictive, they are as follows. A non-spendable fund balance includes items not in a spendable form or are required to remain intact for legal or contractual reasons. A restricted fund balance records items constrained by external entities or imposed by law. A committed fund balance records items constrained by the board through formal action and can only be removed or changed by the board. An assigned fund balance records items constrained by the district's intent for a specific purpose, but is neither restricted nor committed. An unassigned fund balance is the residual classification for the general fund only. Most general fund activity for most districts record fund balance here. It is also where any negative residual amounts for all other governmental funds are reported. The size of a fund balance is strictly a local decision. The Department of Public Instruction makes no recommendation. Our financial advisor, PMA, reports that the median fund balance maintained by AA2 Moody's rated districts is 20.9%. This district is within 0.6% above that amount. PMA and the district's audit firm, Schenck, state that the district should maintain a fund balance in the 20 to 25% range, with the upper part of that range being preferred. A school district or governmental entity with a strong fund balance has advantages, such as the avoidance of interest expense incurred when borrowing short-term for up to 13 months, the ability to react confidently to unforeseen expenses, and the reduction of debt issuance costs that can save taxpayers millions of dollars. The Stevens Point Area Public School District currently maintains a Moody's bond rating of AA2 and is an indicator of the district's strong financial position. A school district or any governmental entity with a strong fund balance has advantages such as the avoidance of interest expense incurred when borrowing short-term for up to 13 months, the ability to react confidently to unforeseen expenses, and the reduction of debt issuance costs that can save taxpayers millions of dollars. Moody's issues ratings from a high of AAA to a low of C. Within the AA to CCC range, the letter ratings are parsed into 3 groups identified by a 1, 2, or 3. So the top rating is AAA. The next highest rating is AA1, then AA2, then AA3, then A1, A2, A3, etc. What use does the district make of the cash portion of its fund balance? Cash flow. The district uses the cash portion of the fund balance to pay bills that come much faster than revenue. This table shows cash flow by month over a 3-year period. There are 2 low points in each year at which the district runs out of cash or is close to running out of cash. Those 2 low points come at the end of November and the end of May. These low points come about because state aid comes incrementally in September, December, March, June, and July. Property tax receipts come in January, February, and August. This graph showing the previous table data visually illustrates the low point phenomena. The district begins the year with cash balance that becomes steadily depleted by constant expenditures, reaching the first low point at the end of November. Then an influx of cash at different periods via a December general aid receipt and a January and February property tax receipts helps replenish cash. Expenditures continue to draw down cash until reaching the second low point at the end of May. Perhaps the best answer to the question of how large should the fund balance be is an amount sufficient to avoid short-term borrowing for cash flow and sufficient to allow the district to realize specific short and long-range goals. In one respect, a district's fund balance is like your own savings account. Once cash is expended, it is a difficult and lengthy process to rebuild the balance. When it's gone, it's gone.